Coming up next here on WVOX, an introduction to a brand new quantitative sports trading technology platform known as the Wolfe Line. In a conversation from the storied Black Sheep Pub and Restaurant at Rittenhouse Square in Philadelphia, Wolfe Line founder Gregory Wolfe and host Dean Petkanas will explain to listeners how this patented technology is nothing short of a global paradigm shift from old-fashioned betting to quantitative trading with sports speculation as the underlying instrument. If at any time during the discussion you have a question about the Wolfe Line, you can call the WVOX listener line at 914-636-0110. Or you can always email Greg at thewolf@thewolfeline.com. That's thewolf@thewolfeline.com. Start trading sports like a seasoned Wall Street trader with a color-coded platform that literally anyone can use. No credit card is necessary to sign up for full access for 2 months, and that's absolutely free. Just a valid email address is needed. No obligations, no scams or gimmicks. It's not gambling anymore. It's quant sports trading.
Welcome, Greg. Good to have you here today.
Thanks, Dean. Glad to be here.
Let's get right into it because you have a very disruptive technology that bridges the gap between what historically has been known as gambling and investing whenever you're making an investment. And I hearken to my horse trading days where I go out to Del Mar and I hear the classic Trevor Denman, you've got 10 minutes to get your investments right before the start of the race. So tell us a little bit about how you came to bridging the gap and the technology in and of itself.
When you talk about investment, you talk about speculating, you talk about hedging, you talk about trading, you talk about whatever terms you want to use. It's just basically semantics. And there's, for a long time, been stigma attached to any type of sports speculation because it really hadn't matured to the point to where it is right now. There are a lot more assets, asset classes, and securities that sound more like gambling to me than a sports speculation. At this point, we're very fluid to the point to where, together with Nevada SB 443 being passed into law in 2015, we are ready to make that jump with sports being a security. It's labeled now as a security by the legislature of Nevada. So I think it's about time we start treating it like that. Our global patent claims go back to January of 2010. So we were around for quite a while and doing research and development and building everything to be as top-notch and user-friendly as possible for everyone around the world in a universal context for any sport or asset class, kind of waiting for this legislature. So it just comports with what we've been saying and doing.
So just to give the listeners an idea of what it looks like, you have a graphic user interface. They go to thewolfeline.com. They subscribe. They become members. And what they will see is they will see a simple chart, although what's behind it is not so simple because it aggregates supply and demand in really peer-to-peer or exchange-type investments. I know that you've got some background on the Philadelphia Stock Exchange. You traded options. I've traded options. We understand that side. But to simplify for the audience, they're going to see a visual graph based on whatever opportunity exists, whether it's cricket, baseball, football, basketball, soccer, you name it, tennis. You could even bring politics into it. But your graph gives a visual representation of supply-demand in its simplest form and then some other analytical tools that come with it as well. Is that correct?
Absolutely, Dean. What it comes down to when you distill what makes the closing price of a sports speculation, and that's all that matters, is the closing price of a sports speculation, because that's obviously where the true price is, where you have reached what we call the measured marker or the threshold, which is a market agreed upon equilibrium of price, volatility, or probability. Now, when I say price, that could be relative strength. It's also point spread or handicap. When I talk about volatility, that's the over-under or the totals in layman's terms. And when I talk about probability, that's more the options guy in me coming out, because you're talking about a delta probability percentage, which is analogous to a money line or an alternate money line. So the two things, the two major constituents of what make up a sports speculation price, and these are relationship markets, make no mistake about that. They're all relationship markets, most similar to foreign exchange, obviously, because it's one asset relative to the other. If you're looking at just the NFL, for example, Cleveland versus Pittsburgh, basically you're just doing the same thing as the yen versus the dollar.
Yeah, but in Pittsburgh and Cleveland, you got to cross the Monongahela, and Japanese yen dollar, you got to cross the Pacific.
Yeah, all baked in. All baked in. So what we're doing here is that the two main constituents of the closing price of a sports speculation are one is the efficient market hypothesis. Most of the listeners, I would think, understand what the efficient market hypothesis is. A guy named Dr. Eugene Fama won the Nobel Prize for its construction in 2013. With all respect to Dr. Fama, it's part of what we do. It's part of the pricing that goes into what is relevant in this particular context, but it's incomplete because it ignores the behavioral economics aspect of it, which is the second major part. But real briefly, for anyone that doesn't know, the efficient market hypothesis just says that all fundamental information that has been disseminated and made public will be included in the price, and it's baked in. So
it's absolutely true, because if price action is continuous through the game, and right before the half, let's say, God forbid, Antonio Brown goes down with a knee injury, the price movement in terms of the second half of that game is going to be reflected because everybody watched it on TV.
It's digested. Everything is completely digested. We go all the way back to the seminal book by Edwards and McGee, 1948, I believe, that discussed the dawn of technical analysis as we were moving forward that is only concerned with price action. Obviously, this was 25 years before options came on the scene, so they didn't speak of volatility or probability. It was simply price. So that is a major part of that. Obviously, the second huge part of it is the behavioral economics, and that's really the cream on top of the cake, and that's where the edge is found. That's where you get the irrational supply and demand, and you get the imbalance that occurs there. If we're dealing with something, and this is just common sense to think about it, where would be the best place to display the importance of behavioral economics than a sports speculation market or a horse racing speculation market, where there is absolutely no tangible asset associated with the perceptions of price, volatility, or probability. It's only abstract perceptions being traded infinitely back and forth with, as I said, nothing tangible. So because of that, behavioral economics is most certainly the most paramount part after you understand the fact that everything publicly known is digested by the market and therefore made irrelevant.
I just want to be clear about something. Like, I've looked at your technology. We've gone through it. I've been through the demos. Mm-hmm. And you're 100% agnostic. The subscriber has to read the tea leaves, so to speak. You chart it, you graph it, you put it all there in terms of the supply-demand metrics, but it's up to the user to come to a determination of what they think is going to be their best resultant investment. Like, I have to choose between Pittsburgh versus Cleveland or Miami versus New England, and I've got to read that information. And if I've only got one investment to make for that particular period, I've got to determine myself what's best. You're not going out there making any prognostication whatsoever. That's correct.
It's selling shovels in a gold rush.
Exactly.
That's basically what we're doing. What you need in any scientific pursuit, and as we know, trading is, the amalgam of science and art. A thermometer is a great example. A barometer is a great example. An altimeter is a great example. A glucose monitor, a blood pressure cuff, whatever you want to talk
Traffic
about.
Signal. I could choose to blow through a yellow light, maybe get tail-ended by a red light signal and either get the ticket or I don't get the ticket. The risk is mine as I'm coming to that intersection if I see the signal.
Right.
But also, to be clear for the listeners, this is as much a tool that gives sovereignty to the investor as a graph on stockcharts.com or on E-Trade or Ameritrade that opened up a tremendous amount of volume to the markets that weren't there before, because the tool is now there for the user.
Absolutely. It's a complete paradigm shift in the industry. It changes the entire landscape of how people look at these markets and understand that it's 100% contingent on these clinical market forces that, just like any security, again, conducive with Nevada SB 443 law, determines these products to be a security, so we should treat them like one. The regulation will come from either the CFTC, the SEC, or FINRA. And the only thing I can say about SB 443, again, out in Nevada, is it's funny because it does have a tremendous amount of value from a conceptual standpoint and a theoretical standpoint, helping to get this moving forward to where it should be. But Nevada is just, once again, they're late to the party. They have these actively managed hedge funds now where they're using sports as the underlying instrument at exactly the wrong time, when everybody's fleeing from actively managed funds and they're going and trading for themselves. I believe that PIMCO Ultimate Return Fund in the last 3 years has gone from $300 billion under management to about $75 billion under management. So they're either going to passively manage funds, which there is no correlation to in the sports market, or they're quantitatively trading online for themselves. And what we do is we offer this completely new market, and we're catering to those people. So you just are going to go to whatever your particular brokerage is, and just as easily as you're going to have analytics for commodities and currencies and stocks and ETFs, you're going to have analytics from the Wolfe line for sports speculations, and that includes fantasy for the people that have a proclivity for that. So depending on your jurisdiction, we also have a complete suite of paper trading and virtual currency that we call Wolfe Bucks, which can be used in many different ways. It can be used to hone your skills in a marketplace that you're not, or an asset class that you're not familiar with, Filipino women's basketball, for example, or German handball. I mean, anything you want, checkers, whatever it is that there's a market made on, we can use the quantitative tools at the Wolfe line to give people what they want, and that's the ability to establish long-term theoretical market edge. And that's just the trader talking. I mean, from a personal standpoint, and I'll make it real quick, it was just like, okay, first sports bet at 7 years old. I was at the track by the time I was 14, the old Garden State Park. When I found out that the racetrack was not your opponent, that they were just kind of taking a brokerage fee, a huge brokerage fee, to be honest with you, 20 to 30% now, which is why they're in so much trouble. And it turned out that it was just a peer-to-peer exercise. Well, that was when I kind of got hooked on the whole behavioral economics deal, and oversupply, under demand, and overbought, oversold, and the whole shebang. And then after that, my friend who I grew up with and was going to the races with for years, I was out in California doing my thing. I think I called on with like a psychedelic rock band or something like that, and he called up and he said, "You got to come back. I'm trading on the Amex. I'm doing this. This is great for us," and all this other stuff. By the time I got back, it was 99, and that huge shift, that huge shift was over. Nobody had edge anymore. You actually had to speculate. You actually had to know how markets worked. You couldn't just sit there and 10,000 up or whatever and just buy on the bid, sell on the offer, whatever the hell they were doing. I actually made my bones on the desk for a firm out in New York, and started as a clerk and learned the whole thing, and I was one of the first registered market makers on the ISE, which was the first electronic options exchange, I'm sure you know. And that was during the dot-com bubble, and I was just like trying to learn all this theory, not only derivative theory and option theory, which is, as you know, is the top of the food chain, but also market mechanics, technical analysis. And that time, technical analysis was still kind of like seen as voodoo. And we still have people you and I know personally that call it voodoo. And it's just absolutely insane that they would do that, because all technical analysis is a quantified and graphically displayed story of behavioral economics.
Correct.
That's what it is. And, if I got to quote Jesse Livermore, he said that these patterns repeat themselves at certain levels, and of course we have support levels, resistance levels of price, volatility, etc., trend lines, channels. That's behavioral economics, and that's how it works. We call it serial correlation, and it's absolutely true. And the great thing about sports as the underlying is that it can never go bankrupt. A stock can go bankrupt. A currency can become insolvent. A house can burn to the ground with and have no value left with no insurance. But a sports relationship, it's a continuing spiral of price action or volatility action or probability conditions that's just in these finite stanzas that we quantify and make it, like you said earlier, as simple to read as a coloring book, a traffic light, or a thermometer. And that's That's what we want to do is give people legitimate analytics that can help them and be extremely efficient and take all the work out of it for them.
Well, there you go. That's the Wolfe Line at thewolfline.com. The Wolfe Line Analytics does consider price action up to the moment. So what Greg is saying is absolutely 100% true. You're going to get that information priced in to the visual graphical model that you're going to see at the Wolfe Line when you go to thewolfline.com and you subscribe for a user package. And just to drop back to a couple of things that you talked about in terms of the Wolfe Line having its own EMH, which constantly proves itself over 130,000 relationships. You know, you talked about German handball. So you're going to get that the relevance of that particular market, even if there are only 10 investors in that particular event. Germany versus England in handball, and there are only 10 investors. It's like being at a poker table with 10 hands, right? So you're going to have that visual back no matter what. If you had 100,000 people making investments on Pittsburgh versus Cleveland, the relevance in terms of the visual response of that behavioral side up to the moment is priced into that visual metrics.
The component there that you're talking about is liquidity, like always. Certain asset classes or certain issues have more liquidity, so this is where we get into kind of the physics of
treasuries versus copper.
Right.
Whereas at one point copper was heavily traded in the 20s and 30s, industrial use, oil as well, and then treasuries became...
Let's just use Apple Computer versus Clovis Pharmaceuticals, something like that. I mean, Apple is going to obviously... It's much harder to move Apple with the same force than it is Clovis Pharmaceuticals. So in that analogy, you know, Apple would be the NFL point spread market. It's a much tighter, less volatile market than the German handball that you were talking about. And it's interesting that I bring up Clovis Pharmaceuticals because we were talking about what actually is gambling and what, you know, these semantics and this nonsense, and, you know, how the big part is moving from, you know, those ugly words that really kind of distort people. And to be honest with you, when you look at PASPA and UIGEA and RAWA, which are the three, it's two federal laws and one bill that try to make it to where one state in this country, and we're an international, you know, company, we're patented all over the world, so the United States is not the be all and end all to us, but I just find the legislation very interesting and very hypocritical and very wrong, to be honest with you, from a constitutional standpoint. But the Professional and Amateur Sports Protection Act of 1992 could just be eradicated by just, you know, one sentence in Article 4, Section 2 of the Constitution. It says, the citizens of each state shall be entitled to all the privileges and immunities as the citizens of the several states. That's it. How could they write a law in 1992 that allows Nevada to do something that every other state can't do? So it's absolutely absurd to do that, and, you know, we're going to fix that. If they don't do it through the legal channels they have now, obviously we're going to fix that by making... together with that Nevada state law, again, we're going to make it impossible because of the theory we have, because of the practical application that we have, because of the tools that we have, because of the terminology that we use. It's going to be impossible to have carve-outs that make it to where you can use quantitative analytics and make trades for traditional financial instruments and then somehow discriminate against sports as the underlying instrument for what your speculation is. So, you know, when you talk about Clovis Pharmaceuticals, there's just one name that pops up in my head. I mean, you own the stock at 110 on a Friday. The FDA arbitrarily comes out the next day and says, hey, Clovis, you know, your number one drug is not going to make it through this part of clinical trials. You wake up on Monday and your stock is $10 a share. I mean, what's the gamble, really?
Right. And we don't wish this on any professional sports team, but you hardly ever heard, matter of fact, have never heard a plane going down on Saturday before a Sunday game.
Actually, the analogy there would be the way that interest rates have been manipulated and how that's affected equity prices since 2007.
But there would be no action on that, whereas the difference is in Clovis, the market's going to open up and someone's going to be on the losing end of that trade.
Yeah, it's indicated. But if you remember in 2007, before the market opened, the Dow futures were down 1,000 points 2 times, and it was actually starting to breach that 20% into bear territory for the Dow. Mm-hmm. So Bush came out with Bernanke, and they said, okay, well, we're going to cut a full point on the Fed funds and 100 basis points, and then by the end of the day, the Dow was up 1,000. So what if you had it? You were right to be short the diamonds, but he comes in before the bell and does that, and he just blows up your short position.
Look at
that would be like Roger Goodell coming in the third quarter and saying, you got the Patriots and saying, by the way, all the starters for the Patriots, you can't play anymore, and you're up 14, and you end up losing.
You're still going to get price action there.
That's how we measure buying pressure and selling pressure. We have a correction mode. We have a momentum mode. We have more liquid, less liquid. So you can customize everything. And then it gets disseminated out to standard deviations of the price action, the volatility action, just like everybody would expect when they're coming from traditional quant trading. And the reason why we put it into a graduated color format of alert significance is because we offer a full customized alert program to where you can enter in whatever pattern you want and back test it yourself, and then you get emails right to your email box for any sport or whatever it is, and there's a tremendous amount of choices there as far as the customization. It comes right to your email box or your SMS, whatever you want.
Let's talk about some examples like stuff against the spread. We don't talk enough about the tools, and again, this is radio, so it's hard to visualize it, but listeners should try to visualize.
Yeah, so there is a reasoning behind the wolfline.com being the name of the product and the platform and the website and the business. Actually, Icarus Heigl Analytics is the parent company. But the Wolfline represents the wolf, which is, an allegory where you want to be a wolf and not a sheep in any type of marketplace where, it's about independent thought, and the crowd is, there's an old Nietzsche saying, insanity in individuals is rare, but in large groups, political parties, epochs, it's the rule.
Lone wolf, very sovereign. By the way, I love the logo. Yeah. The eyes, different colored eyes. The signal eyes are there.
Yeah, the other thing I just wanted to make sure I squeezed in the Livermore quote, because it was something we were talking about before, was, the only news that matters is not in the headlines. And I thought that was a very profound quote by Jesse Livermore again, who made $100 million in the crash of 29 and almost that much in the crash of 1907. So I would rather listen to the ghost of Jesse Livermore than some clown, saying that he's a wise guy or something like that.
Talk about the Wolf Bucks a little bit. So users out there, you subscribe to the wolfline.com. You go and use the tools that are associated with the Wolfline analytics, and you earn Wolf Bucks, right, by using it?
Depending on your performance, you could lose Wolf Bucks. It depends on if you are speculating correctly or not.
Okay, well, I don't want to confuse any listeners. This is completely agnostic, no prognostications, but you actually reward your users for being right, and that's how it works?
Yeah, that's part of it. I mean,
the better you learn to use the tools and profit from it, the better you earn in terms of Wolf Bucks. Well, Wolf Bucks are really tradable as, cross hybrids. Like I could take them into the Nordstrom rack or...
Right, depending upon the agreements that we have with different businesses, whatever,
correct.
You can use them to get 20% off your bill.
It's an electronic currency,
whatever.
like much anything else.
It's another virtual currency.
A rewards card or
something. Sure. You get rewarded for your performance because we've distilled everything down to dynamically adjusting risk variables, which are quantified calculations. And then from there, collate that into the color alert with the patterns and everything. And that's universal over cultures and languages and everything else. You might not be so comfortable if you're from the Philippines or Russia and you're trying to enter into the NFL. So you might want to use that as training wheels for you. So Wolf Bucks are like training wheels when you're going into another particular marketplace where you don't know whether it's more liquid, less liquid, how it behaves. So then from there, it's up to you to do your own back testing, to do your own pattern recognition, and then you customize it from there, and that's where another great advantage of having the Wolf Bucks. And virtual currency is very important. And again, we have every feature that people would be expecting if they're coming over from these traditional analytics sites where you might be paying anywhere from $300 to $4,000 a month for their service. I mean, again, I don't want to mention any names, but there's one particular service, some people might call it a terminal, that charges about $4,000 a month to have access to. And they give you for the major sports, they give you the odds for, the NBA or whatever you might want to see. And then they have the audacity to give you the gold sheet, for God's sakes. The gold sheet.
That's like that's like going back
30s.
to That's like going back to when they used to write the quotes on OTC bulletin board markets in the '60s with chalkboard.
Yeah, with a
chalk.
chalkboard. Yeah, exactly.
That's what that's like.
That's how insulting that is. So I mean, I've even whether or not that company will license the Wolfline technology is pretty much a no-brainer to me. We got to do business at that point. It's a business proposition. Who's going to get the license? Because we can't white label. Obviously, we have to custom label because we're the only game in town. And that's why we got the patents, and that's why we're completely proprietary. And it's again a paradigm shift, and everybody knows it's us. We're not trying to hide who we are.
We wish you all the best success in the world.
Don't
you
bet
and
like
your
a
partners.
sheep, man. Trade like a wolf.
Don't bet
Betting
like a
is
sheep.
over.
Trade like a wolf.
It's quant trading.
The revolution of the wolf line, similar to going back
trading.
20 years, traditional financial markets, their theory technology products empower the individual trader to be their own expert.
You've been listening to a conversation about the groundbreaking new quantitative sports trading technology platform known as the Wolfline. To become a member, create an account at thewolfline.com. Start trading sports like a seasoned Wall Street trader with a color-coded platform that literally anybody can use. No credit card necessary to sign up now. For full access, you'll get 2 months absolutely free. Just a valid email address is needed. No obligations, no scams or gimmicks. It's not gambling anymore, folks. It's quant sports trading. Don't be left behind. Go to thewolfline.com now.